Reddit shares giving some back here this afternoon after a huge run. Social media business did beat the bottom line estimate in the top, but maybe if next outlook wasn't enough. For George Tillis, taking a look at the numbers, I don't know, George, nothing sticks out as horrible to me from these figures. Maybe I'm missing something. I know it's been on an epic run, so perhaps maybe the valuation catching up to it to some degree. Daily active users, maybe a little light. Street was looking for near 104 million. They reported about 102. Is 2 million missing active users a reason for this thing to plunge?
Well, there's a couple of reasons. I mean, just going back, first off, for those who don't know the stock, it was a recent IPO back in March of last year, and it's up, about 350%. And if you just go back to the midpoint of last year in May when they reported, essentially they had the monthly active users around 73 million. Last quarter, they grew that number by 47% to 97 million. So this quarter, it's up 39%. So you can see that they're still growing tremendously. Now it's 101.7 million, but they did come in a little bit shy of estimates. But nonetheless, they did post a beat on the adjusted EPS. 25 cents was the estimate. That came in at 36 cents. And then the sales came in 428 million. And that was significantly higher than the 405 revenue estimate for the quarter. I think what's happened here is essentially two things. If you look at the adjusted EBITDA that the company reported last quarter, it was around $202 million. This quarter, the guidance, this is for the reported quarter. For the guidance for next quarter, it's actually expected to go down to between 80 and 90 million. So let's call it 85 million at the midpoint. Revenue estimates are expected to be higher, around 365 million at the midpoint versus 358. So for all intents and purposes, the guidance, at least on sales, is a little bit higher, but the adjusted EBITDA numbers are expected to be down. And I think what's happened here is this is a very unique asset, and I think that's why the stock has moved tremendously over the past, at the very least, couple of quarters. I think the financing needs are starting to catch up with the company a little bit, and that's potentially why we're seeing the adjusted EBITDA for next quarter coming down by about half of this quarter's numbers because of maybe some dilution effects that are needed to essentially finance what is, from a GAAP basis. If you just look at the numbers last year, they lost around 536 million on 1.12 billion. That's excluding this last quarter. So to me, it looks like they're probably guiding lower on an adjusted EBITDA basis because of dilution effects.
So appreciate that, and a very real issue, of course. But I think the market has prioritized blistering growth for the company over the last year with 70% growth. But I get you, because the fact that the profits went negative, it means it's like pure growth. And there's some stuff out there that the market's okay with pure growth right now, but generally investors have been more interested in high quality cash flow and those type of factors and styles. Reddit has been an exception in its strength despite a lack of profitability. So maybe it's sort of catching up to it here.
Yeah, and that's kind of why I brought that phrase unique asset. And so when you're a unique asset like Reddit is from a social media platform, that in of itself may cause the stock to trade at lofty multiples, at least on a forward valuation basis. Now, one of the things to keep in mind is if you just look at the quarter they reported, it's 36 cents. If you look at next fiscal year, which they're now entering in, it's 2025, the full year estimates was 88 cents. So just even the numbers coming into the report at 25 cents, they were already essentially running at a faster clip than the estimates for the full year of 2025. So that gives you an idea that the EPS is gearing higher, but the stock is up, tremendously over the past, 11 months or so since their IPO. So I think this is basically a give back quarter. And what I mean by that is that you're saying, 2 steps forward, 1 step back. And this is the way the stock should trade, at least in the intermediate to maybe longer term. But at the same time, they seem to be monetizing their ad growth. Now, I haven't seen all the specifics this last quarter they just reported.
Revenue per user, 421.
But if you just look at
Street was only expecting 391. Their ARPU, average revenue per user, that was a nice beat. So that's definitely the golden nugget here. But obviously, even if your revenue per user is going up, but then your users are disappointing on the growth, then, there's, to your point, there's kind of a negative for each positive here.
That's the thing. I think it's balanced, to be honest with you. I'm just looking at last quarter, and this is the thing. They essentially, the digital license revenue essentially grew tremendously over the last quarter at 500%. And that gives you an idea that there's more data partnerships being established for the business.
That's good.
And that's why we saw that big gap to the upside post-earnings.
Thank you, George. All right, so the give back to your point, a huge gap rally on the last earnings, gap down on this one. That's what happens when you're in pure growth play. Get ready for volatility. Thanks, GT.